We know that a lot of big whales are accumulating them and putting them on cold storage. We know that XRP is going into the treasuries of companies. We know that the supply is going to be reduced. And now here comes Canary's spot ETF. So they must have accumulated an acceptable amount of XRP tokens and they're ready to let this beast go. Now, all I can say is don't be surprised if it falters a little bit at first. Remember, they want to shake you out. But here it comes next Thursday, folks. Thursdays are nice. The first spot XRP ETF in November, as we expected. And I'll tell you what, I think it's a little early because they're not quite done playing the psychology of the market against retail. And so they're probably going to release the Canary Capital. And then it's probably not going to, I don't know. I think that it's going to be a situation where somehow, some way, it's not going to prove to be what everyone wants it to be. And we're going to talk about it.
Check the mic and make sure it sound right.
Yeah, that was from my most recent video I did a few days ago. And as we saw, we didn't get the run up leading into Thursday as we thought we would. Of course, Thursdays are nice. We're going to talk about a few articles, starting with this one here. XRP ETF race heats up as Grayscale and Franklin Templeton join Canary and Bitwise and Turbocharging S1 updates. You'll recall from one of my prior videos as well, I told you a month ago that the XRP spot ETF runners are running for the tape, indicating that they're not all going to come at the same time. And guess what? They're not going to come at the same time because guess what? 21 shares also files for an XRP ETF back on November 8th. We'll talk briefly about that. And then we'll talk about how the U.S. Treasury and the IRS clear path for crypto ETPs to stake digital assets and share rewards. They're really opening the road for ETF, spot ETF, specifically with cryptocurrencies adoptions. And as a part of that gearing up, we see what machine learning algorithm predicts XRP price at the end of this month as XRP enters into what is termed as the fourth phase of ongoing trend to push prices to $10. Will we see $10? Our first article, which was released a week ago on the 5th, indicates that they're in the final stretch of this race, while Grayscale and Franklin chase XRP ETF approval. It brings out that they have joined Canary and Bitwise in filing swift updates to their S1 registrations for spot ETFs. By removing delays and adding key operational details, the issuers signal growing confidence that the SEC's recent guidance have opened a fast track to reach the market. Yes, a fast track. Canary Capital set the tone. Can we say set the pace? Because they're using similar terminology. I used to run track. By trimming the delaying amendment from its S1 and publicly indicating an automatic effective window that points to tomorrow. And if you like the content I'm providing, please make sure to like, subscribe, and ring the bell for notifications, and then come back for more DK Will Talk About It. A move designed to let the ETF go live as soon as exchange and clearing mechanics permit. That filing and the stated target date have pressured rivals to tidy their paperwork and lock in market positioning ahead of what analysts expect will be a concentrated debut period. We certainly hope that's the case as Grayscale and Franklin Templeton join Canary and Bitwise, excuse me, and Turbocharging S1 update. And they're not alone in this race. Remember, they're all running for that tape. 21 shares also filed for an XRP ETF with the SEC. And this November 8th article shows that they filed November 7th, where it starts their clock for running in this ETF race. Much like 21 shares, several companies have made changes to their previous S1 filings within the last 2 weeks to cut short the approval process of the SEC. And we know that the SEC introduced general listing standards in mid-September for spot ETFs. Now, just to be sure, I'll say this again. These financial institutions understood what was going to happen because there's always a period for public comment. And although us, the general public, don't usually make comment, you can bet that the big financial institutions and financial firms, advising firms, do make public comment. So they have a clue what's coming before it even comes. So, as my previous video brought out, we need to learn to embrace and accept that they are trying to push retail into the products that they're used to, the exchange traded products. And this article here, the US Treasury and IRS clear path for crypto ETPs to stake digital assets and share rewards. It says groundbreaking U.S. tax reforms are unlocking a new era for crypto investment trusts, granting them the power to stake digital assets under a protected federal framework while preserving their vital tax classification. Keep in mind that staking is almost like putting your money in a CD at a bank, and that's the best explanation to make it plain and simple. But this article went on to say that they released new guidance to define the tax framework for the assets by staking and investment trusts. It establishes a safe harbor allowing qualifying investment and grantor trusts to stake digital assets under proof of stake protocols without losing their federal tax classification. Who uses proof of stake? Doesn't Ripple use proof of stake? I'm pretty sure they use proof of stake. It says the move, according to Secretary Scott Bessent, the move increases investor benefits, boosts innovation, and keeps America the global leader in digital asset and blockchain technology. The new rules align with recent actions by the US SEC, including approval of in kind creations and redemptions for crypto ETPs and the generic listing standards for exchange traded products holding digital assets. Now, let's keep in mind too, there's been talk about no tax on profits from digital assets. But in this instance, with this push towards financial institutions offering ETPs, and I even got an email to that effect from E-Trade, I got it from, it says cryptocurrency has become an important part of the financial landscape, but many investors are uncertain about owning crypto and how to invest in it. So we're going to do you a favor. You can go to spot ETPs and you can have a convenient and familiar way to add digital asset exposure, not digital assets, digital asset exposure to your portfolio. They trade on an exchange much like exchange traded funds or ETPs. They trade exactly like and hold the actual Bitcoin and Ethereum as the underlying asset. Now, give that some thought. If the tax guidelines do say that there's no tax on profits from cryptocurrencies, American based, according to the current administration. And it's the financial institutions offering you the product of an ETF while they hold the asset. They are the ones that get the tax exclusion, not you. You're going to pay taxes on the earnings on your exchange traded products, whereas they get profits on American based cryptocurrencies and they don't pay the taxes. Can you see how they're squeezing retail back in their place to make sure that they are the ones controlling the assets? So, this is just another feature that's showing that cryptocurrencies are becoming a mainstream part of the financial system. Is there anything else to justify that? Let me show you something else. It says market view. The deleveraging event of October 10th continues to reverberate in crypto markets, with only a handful of sectors coming out unscathed from the pullback this week. Okay, we're talking about crypto markets. From a broad macro perspective, directly affected by AI bubble fears in where? US equity markets, likely linked to the Fed's hawkish cut last week. So now the cryptocurrency industry, as Trump calls it, is a discussion point, a talking point, and an affected industry by normal financial indicators and movements. It says it led to ETF outflows, tech stock declines, and CEO warnings of possible drawdowns. So, yes, it is absolutely becoming a part of the mainstream discussion. And if you haven't got on board, you need to follow Garlinghouse advice and get on board. I said I'd also talk about this article here, a machine learning algorithm that predicts XRP's price on November 30th. And after actually reading the article, it was easy to determine that this machine learning algorithm needs to keep learning. So we're not going to spend too much time on this because the algorithm predicted, with traders speculating on how the asset might move in the following days, Finbold turned to its AI prediction agent. Now, this is a November 7th article to see where XRP might stand by the end of the month. According to the forecast, the asset is only witnessing a short term correction, being set to recover 5.22% and trade at 222 by November 30th. Well, that's pretty interesting because XRP is trading at $2.41 today. And we're not quite yet to the end of the month. We're not even at the middle of the month. Now, I could be wrong. Maybe it's going to go up and go down because of these ETFs being used to discourage the market and play the psychology of the market. And actually, when the Bitcoin ETF came out, it did kind of go down first after a little initial interest in the spike, and then it went down, and then it made its way up after a period of about a week or so. But right now it's trading at 241, and quite honestly, I don't think it's going to go much lower than that. I think what's more likely going to happen is they're going to push it up to an area to get more and more retail interest and retail liquidation to enter the market. And they're going to do that with articles like this. The XRP fourth phase of an ongoing trend to push prices to $10. That's the bait to get more and more people to come on board and to put their money into this crypto market. And I strongly suspect that when they get people to do that, what's going to eventually happen is it's going to go down again. It's going to go down hard, like that roller coaster picture we've seen from who was it, Mr. Fool, maybe. And then what that does is going to discourage more and more people and make it more of a normal asset that's going to be locked up in ETPs as opposed to people taking the risk. They don't want people taking the risk. They've seen how much money people can actually make on cryptocurrencies, and they want to take control of making that money. And so, yeah, they put these kind of articles out to get you interested and make good outcomes occur for a small number of people. Who's going to be that small number of people? Probably the people who are already there. Because if you come in after the hype starts because it went from $2.40 to $3.80 or $4.20, you're not going to get very many for your money. And so there's only so much you can spend. So then when it runs up to 5, 8, 10, 11, who knows what, you're not really going to be able to take the advantage of that rise depending upon when you committed to come on board. And so at that point, it becomes a matter of, are you going to take profits or are you going to wait for that dive because you're greedy? Don't be greedy. And then it's going to crash back down after touching maybe $7 or $8, and it's going to go underneath your $4 or whatever you spent for it. And then you're going to bail because you're scared. So just remember this, folks. Pigs eat, hogs get slaughtered. I think that's enough for now. I'm DK Will. I didn't want to do too long of a video, but I did what I said I would do. I talked about it. Have a wonderful day.
Check the mic and make sure it sound right.